Hello everybody, welcome back for another video. Hope you're all doing well and that you are all having a fantastic day. To start things off, Ethereum co-founder, his name is Vitalik Buterin, proposed a higher staking reward for the upcoming proof of stake algorithm implementation on the Ethereum blockchain on GitHub just a couple of days ago. Per the proposal, 2 million Ether per year would be issued when 134 million Ether is staked, and validating transactions resulting in an annual return of around 1.56%. The current circulating supply of Ether is around 105 million, give or take, which means that this amount of stake Ether is theoretical maximum of sorts. Touching on that for a slight second, a lot of people have been wondering if Ethereum is going to have a maximum amount of coins. It looks fairly unlikely. There are a number of people who don't want the Ether coin to be undervalued or to be devalued because there are going to be more that are going to be created every single year. But not to really dive too deep into it because there's more inside of the article, it kind of comes down to the fact that we know that the last Bitcoins won't be mined until the year 2140. And the idea is that, you know, we had, I think it was 3 Ethereum that were being mined every block, and now I think it's only 1. So the reward is being constantly cut down. So there will probably be, at least for the time being, not be a maximum amount of Ether that's going to be out there, because the idea is that as more people go into the network and start using the platform, that they want to make sure that everyone can kind of have some, if that kind of makes any sense. Not to really dive too deep into that because that's an entirely different discussion, but kind of where we're talking about the maximum of sorts. Anyway, the proposal also estimates that the annual return for various quantities of validating Ether, for instance, if only 1 million Ether were staked, validators would receive an annual return of 18.1%. The community on Reddit has reacted to the proposal seemingly well, with many defining the rates as more reasonable than the previous ones. So before we even continue, there's just a lot to kind of talk about in this situation. The idea is that once Ethereum has proof of stake, this is what analysts say. This isn't what is exactly going to happen, but the idea is that you will need to stake your Ether onto the network to show that you are staking your claim, what have you, to be able to create more coins. The idea is the more Ether that you have, the more Ether you will kind of create and get to go inside of your own pocket. So when it says, you know, if only 1 million Ether is staked, the reward, or rather the return on that, would be 18.1%. It's expected that tens of 20s of millions of Ether will be staked on the network, because people are, you know, you do it to validate transactions, to keep the network safe, to so and so and so, but also because greed is a thing and people want more Ether to be able to create more Ether that will then go into their wallets, and therefore they have more money. So it's kind of gonna be a really interesting cycle, and a lot of other coins have adopted the same exact idea or method, but on like a kind of a different way. But the way that they are proposing it, or rather the way that we know, for instance, right now that it's going to be implemented, is going to cause, it is believed, going to cause a massive spike in price for the Ether coin because of how many people will be buying it to be able to create more of it, if that makes any sense. Ethereum researcher Justin Drake estimated that after proof of stake and sharding have been implemented, with 32 million Ether staked, the validators would receive a base return of around 3.2%. This number is equivalent to around 1% of the total supply. Still, the upcoming Ethereum Improvement Proposal 1559 implementation would mean that a portion of the transaction fees would be burnt. Thus, Drake estimates that with 1,000 Ether spent on gas per shard each year, the inflation would equate to around exactly 0.5%. As Cointelegraph reported at the end of the year, Buterin previously declared that future blockchains with sharding based on proof of stake will be thousands of times more efficient, and they go on so and so and so and so and so. It took years, and I understand that, you know, nothing happens overnight. It took us a very long time to really figure out this information before the information that we had as far as how much Ether you needed in order to be able to take part in the proof of stake kind of thing. I think at one point people were saying it was 1,500 Ether, and that was when Ethereum's price was around like $6, somewhere around there. And then I think people were saying that it was around like 600 and I think 150 Ether, somewhere around like an astronomical number. I mean, especially compared to where Ether's price is today. And I think the number now floating around is 32 Ether. That's a number that I have seen before last year, that you need to take part in this. And also a part of that as well, we're finally getting numbers of how much Ether will then be created by the network after a certain amount is actually being staked. They say, and they have said, Vitalik has said this as well. He said, we will not receive every update on the Ether network until around 2021. However, it is believed that we are going to have the hybrid of proof of work and proof of stake this year. Realistically, over everything else, that is probably the thing that I am most excited for, at least right now. I'd rather have the implementation of proof of stake to kind of dwindle the supply of Ether that's actually circulating around. That would cause the price to, so they say, to go up. And I think the next thing after that, that'll be the most important, is the actual implementation of sharding and of plasma. I'd rather them get that completely right and in check, and us have at least proof of stake sometime this year, which they said is going to happen by the end of this year. It would be nice if that actually does end up happening. Next up, crypto exchange Bittrex said on Monday that New York regulators erred in identifying 2 of its users as North Korean. In a statement issued on Monday, Bittrex said it had received 2 accounts that were flagged as belonging to residents of the sanctioned country by the New York Department of Financial Services, or the NYDFS, which recently rejected the exchange's application for a BIT license. It turned out that same 2 users had been already investigated by the exchange in 2017. Bittrex said South Korean residents mistakenly selected North Korea in our country drop-down menu, but we determined through country identification, physical and IP addresses, that all were actually from South Korea. In an open ed published in CoinDesk on Thursday, Shirin Emami, the executive deputy superintendent for banking at the NYDFS, said that when the agency's examiners sampled Bittrex accounts earlier this year, they identified 2 based in North Korea. The point of all of this is, okay, first, let me address something. I thought I was explicitly clear, maybe not to everyone. Maybe I need to work on my sarcasm tone. But I was talking yesterday in a video, and I was saying that the idea was that at least yesterday, that cryptocurrency prices were moving up, so and so and so and so. And I mentioned how the rhetoric that we had in 2018 was that we needed all of these things in the cryptocurrency space in order for prices to go up. My tone of that was, we don't need these things, but other people are saying that we need these things. For some reason, I saw in the comment section more than one person thought that I was saying that we needed regulations and that we needed this other stuff. I'm not sure if they're new to the channel or whatever the case might be. While I understand that regulations are going to happen, I do not necessarily agree with the way that they are taking place. So I felt like I needed to clear that up because there was far too much confusion in the comment section yesterday when it came to that topic. On the same exact idea, what we're seeing is, I don't even know what to properly name it, word it, call it. Regulators around the world have not done their own research, and we know this to be a fact because we've seen this through many other articles. And what's happening and what's taking place now is that other people are feeling their unnecessary force for things that aren't really taking place. A lot of accounts around the world, this is why when we get into the conversation of fungibility for different coins, like, coins, especially Bitcoin and Litecoin, this is why Litecoin is talking about implementing certain things on top of their protocol, because regulators are of the mindset that because there is a dollar value or a euro value or whatever value placed on these cryptocurrencies, that they then have a right to kind of say what happens to them, where they go, and where you can't do and what you can, and what have you. So we're seeing a lot of instances. It also says this somewhere in this article as well. I think they flagged an account that I think that was belonging to someone in Iran, and they said, no, you can't do anything with money with Iran at all because the United States has said so. When you talk about the need for cryptocurrencies, regardless of what a country might have done or what a regime might have done or what any government might have done, you have to understand that there are still normal people in these countries who do want to get into the cryptocurrency space, who do probably believe in decentralization and or believe in the fact that they should be able to do with their money as they so wish. Not going to dig too deep into that actual topic. However, the point is, a lot of these things, and I know it sounds weird, will actually be a thing of the past over the next 5 to 10 years. When you talk about pushing people further into the cryptocurrency space, it kind of comes down to things like this. Can you imagine being in South Korea, having your account shut down and or flagged because they think that you were in another country that has sanctions because it's another country on the other side of the world who said, no, you can't deal with them. And because you have some sort of a relation or you are next to them and you clicked the wrong thing on their website. Two people. Imagine two people out of around 10, 15, 25,000 clicking the wrong thing on the website and you have your account shut down because of something that a country on the other side of the world ended up saying. It's kind of weird to think about, but this is why I am a strong believer and am usually very excited when we talk about decentralized exchanges and also the idea of fungibility on top of coins and on top of projects. ZK Snarks, Mimblewimble, whatever you kind of want to call them, they are coming. They will be there. And I'm interested to see how, and I really can't imagine this, a world where we aren't tracked, where we can buy and sell things as we wish and do what we wish with our own money. I don't know how regulators are going to deal with that. This is why I said before, I know that they're not, I mean, I'm sure maybe one is. But for some reason, they thought crypto was a joke and they don't really understand how far and how deep that this is going to go and how far, I mean, this, anyway, I'm rambling on, but let us continue. Next up, Lightning Labs. One of the largest Bitcoin companies behind the upcoming scaling technology called Lightning has released its first desktop app on the Bitcoin blockchain. Previously, the desktop app worked on Bitcoin's testnet, think fake Bitcoins used to try out programs, but this is the first time the app will work on the Bitcoin mainnet, meaning users can use it to send and receive real crypto. Notably, the app is non-custodial, meaning that users have control over their own Bitcoin, authored by Lightning Labs developer Tankard Haza and Valentine Wallace. Amazing. The blog post announcing the new app explained, driving this release is a complete commitment to scaling the principles that Bitcoin was built on: privacy, security, and self-determination. For that, we need to go beyond custodial solutions and enthusiast guides and deliver a great user experience for everyone. Other apps work with real Bitcoin today, including Blue Wallet, Zap, and Zeus. But Lightning Labs, originally started by Lightning creators, is perhaps the largest company to release a Bitcoin mainnet app so far. I think it's kind of cool. I was actually looking for information if you would be able to run a node through this in some sort of way. It doesn't appear so. However, they finally have a desktop app for people who may be looking for this. First of all, a side note, when I say do your own research, I don't say that because I like saying that. I like hearing myself speak. I mean, do that. If other things with Lightning in the past before have been unstable, please make sure to pay attention that you know exactly what you are doing before you download this, before you send any money anywhere, before you try to implement anything. Make sure that you understand that there are probably going to be risks with using any desktop app. So please don't throw your Bitcoin on it all willy-nilly. Here's the actual blog post right here. What I think is very interesting, and I'm seeing more and more of this, and I think it's actually kind of cool, is that people are now denominating a lot of things simply in Satoshis. And should we one day see a Bitcoin price over $1 million, a lot of things are going to be denominated in Satoshis. I think the idea is that if Bitcoin hits $1 million, I think because of the decimal placings behind, you know, the normal one full Bitcoin, I think one Satoshi would then be equal to 1 cent. And that was, I find that so incredibly fascinating because this will kind of, I mean, side note, if we live in a world where there is $1 million Bitcoin, a lot of things in the world are going to be denominated exclusively in Bitcoin. That's just kind of how things are going to be. So we'll be seeing that Satoshi thing everywhere. And it'd be kind of interesting to see, because, oh my gosh, there's always so much to talk about. Because we were talking about like, you know, the hashtag, I think it was like stacking sats or like stacking Satoshis or something like that. Like, I think that it was the idea that 1 penny, like 1 US cent, is like 44 Satoshis. And I think like it's like $50 or something like that right now is the equivalent to like 1 million Satoshis or something like that. So this is really weird idea. I don't know. Anyway, I find it kind of fascinating that things are starting to be denominated in Satoshis. I want to see if that ends up happening more and more over the next 2 years, depending on how much of a Bitcoin bull you are and how high you think the price is going to be. Anyway, I found that fascinating. Lightning is developing more and more every single day. It's kind of fascinating. I love it. At the moment, this is heralded as the main scaling solution that we have access to or are going to have access to. So yeah, this is right. I can't finish that sentence. Let's move on. Next up, French financial services giant known as Société Générale group has issued around $112 million worth of bonds in the form of a security token on the public Ethereum blockchain. Announced yesterday, a subsidiary called Société Générale SFH under the OFH token, or Home Financing Obligations token, to represent 100 million euros of covered bonds, a type of security that is backed by specific assets that remain on the issuer's balance sheet. However, according to the report published Tuesday by bond rating agency Moody's, Société Générale was the sole investor, meaning the firm issued the securities to itself and no outside buyers were involved. The point is that they issued this on the public Ethereum blockchain. There are private Ethereum blockchains, but they have it on the actual main public space. I tried looking around on the actual Enterprise Ethereum Alliance website to see if Société Générale was an actual member of it. I do not find their name anywhere on the, maybe I should check for G, Générale. Nope, nowhere around there. So I was kind of surprised that they had issued, to have that amount of trust to issue 100 million euros on Ethereum publicly is kind of significant. So like I said, I checked around, couldn't find it. However, found an article from 2018. It says commodity traders, including Shell and Mercuria, are collaborating with a number of international banks to create a blockchain-based trade finance platform they hope will bring the standard so and so and so. Based in Geneva, Comgo SA is an Ethereum-based consensus development that has grown out of easy trading. A partnership between blah, 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 blah. So this is the only link that I could actually find for this bank, Société Générale, with Ethereum that other banks and other things are also working on. So I assume there's probably, there's always more than we actually know that's actually ended up happening. I assume it wasn't random that they were like, should we just issue $100 million on Ethereum? What's Ethereum? I don't know. Let's just do it. I have a feeling that didn't happen. So I assume they've done their own research, or that they are probably heavily invested or through some type of subsidiary, maybe somewhere on this list that we just don't know the exact name of. Anyway, I found that really cool because it's going to continue happening. I told you guys before, the top 3 coins are gearing up for some really weird, I don't know what, but the point is a lot of people, a lot of major institutions believe heavily in Ethereum, and they are betting on it in a way that they're like writing laws and now putting bonds and stuff on top of it. Yeah. Let's move on. So yeah, this is what we were talking about yesterday. Apparently, where's the photo? Yeah, so this guy, Cryptopolis on Twitter, announced that he was on, through his TD Ameritrade account on NASDAQ, he had actually bought 1 Bitcoin, and that everyone was freaking out. And then apparently he said he contacted support. Apparently what had happened was that it was a paper trade or something like that. I don't know why certain things trigger people in the cryptocurrency space. I don't get it. Maybe it's not for me to understand. A lot of people were calling my video fake news or that I had made it up. And I was like, I showed you the guy's Twitter where he actually showed all this other stuff. And the people were saying, no, it's not real. That never happened. TD Ameritrade, so and so and so. What's really weird is that if you go to Charlie Lee's actual Twitter account, he actually has something here. So he pretty much said it's through my own TD Ameritrade Think or Swim account. It's paper trading, so they are just testing it right now, but it's there for sure. So people are saying that Charlie, listen, I'm telling you what crypto Twitter has said. Apparently, Bitcoin and Litecoin are now trading on the platform, but just in paper, air quotes, what have you. It's not really the actual physical coins, but apparently Charlie Lee says that is not a joke, and that these things are going to happen, and that they are just testing them right now. So, like I said, I don't know what sets people off, why sometimes I say things on the channel and people are like, that's not real, and I'm like, no, it probably is. But I guess maybe second level of confirmation from Charlie Lee that it is actually real, and that eventually TD Ameritrade, maybe though they have not announced this out loud, are definitely testing it on their platform. Anyway, just thought I'd cover that as well because a lot of people kind of lost it yesterday, and I hadn't seen the words fake news so much on my comment section in a very long time. But I do thank you for taking your time to write those 2 words in my comment section. It actually meant a lot to me. To kind of finish things off, you can read it right here. It says Bitcoin's price is unstable. Altcoins decline as market makes up its mind. Very weird title. Yeah, so a little while ago, Bitcoin was dipping and the rest of the market could not take the pressure at all. Like Bitcoin dropped by like $80 and Ethereum was actually lower. I'm not even joking. Like a couple of minutes ago before I started making this video, Ethereum was down by 6%. XRP was down by almost 9%. Bitcoin Cash also 9%. EOS almost 9%. Litecoin 8.25%. Binance coin also dropped down dramatically. It was at $25. So for some reason, Bitcoin's slight tumble in price has caused the other coins to completely panic. What I read was, and this was very interesting, for those who were here around 2017, if you can look back in your mind and kind of remember, we entered a point in 2017 where prices were going up slowly, but we entered a period where altcoins were this. Altcoins were just red. It was anywhere from 8 to 25% down. They were all completely crashing, but for some reason Bitcoin wasn't. There are a lot of analysts who are saying that what's happening is that because Bitcoin shot past 5,400, got to 5,500, that it could be gearing up for a move to 6,000. And what's actually happening is, as you can see, Bitcoin's volume is now $13 billion when it was like 6 billion just a couple of weeks ago. That people are apparently, according to some analysts, I don't know if this is true, I am not the market king, I cannot tell you exactly what's going to happen. People think that what's happening is that people may be selling off their altcoins in anticipation, trying to get some extra money to be able to push it into Bitcoin as it shoots past the $6,000 level. Cannot tell you if this is going to happen for sure, but this is the idea that a lot of analysts are saying. They're saying that we saw this before. You may have noticed in a lot of other videos, people are now looking at the charts from 2013 to 2015 and 2016 to 2017, somewhere around that time frame. And they're saying that a lot of the indicators and a lot of the charts are showing the exact same things that we had before all these years ago. And therefore, they believe that we could be potentially, so saith the analyst, gearing up for a move to 6,000 and that people may be selling off their altcoins in anticipation of trying to get excess funds to be able to get Bitcoin at the right time to be able to profit from it when the price goes up. This is what they say. Anyway, very interesting. I mean, every day, every single day, just amazing in the cryptocurrency space. I hope you all enjoyed. I hope you all are having a great day, great morning, great afternoon, great evening, wherever you are, wherever you might be. Hope it's absolutely fan-freaking-tastic. A lot of people have been, side note, I do appreciate your care, your carefulness. No, that's not the word. Anyway, I have been like clearing my throat in a couple of videos, and I think people think that I have like a deadly disease or something. No. What happens is, okay, first of all, if you want the truth, it's allergy season. It affects my throat. I don't know if it's hay fever. I can't begin to tell you what all the different things are, but over the last couple of weeks since all the trees have been blooming, my throat has been very dry. It's kind of the nicest way of saying it. And then on top of that, to be completely honest, I make anywhere from like 2 to 4, 5 videos a day. So me talking for extended periods of time has not really helped my situation. However, I do it because I love the cryptocurrency space. I like making videos. I like talking to everyone. So yeah, if you hear me clearing my throat, I don't think I'm going to keel over. However, it's simply because yeah, it's allergy season. I'm drinking. I mean, to be fair, I mean, I'm a lot better than I was weeks ago when I actually had a cold. Remember when I had the flu? Anyway, right. I rambled on enough. Thank you all once again for watching and listening. As always, an immense thank you to all of my Patreon supporters. They are Professor Wally from Gunbot University, S.C. Verzely, Fine Art, Brady Niels, L. Doug, Jared Schneider, Wise Night Owl, Shaolin Fried Rice, Gilboa Snake, Crypto Joe, Carl Burchinoff, singer-songwriter Mike Savitz, Rai Rai, Yasha Harari, Amy Starsheen, Jeffrey Ramsey, Crypnotic, Crypto Artist Coldy 3D, Nicholas One Earth, One Piece, One Love, Setsuna, Nick Kanaya, Richie Rich the Third, RF Dusty, Cody, Vlad the Impaler, Paxis, Jeremy Fox, Jim Gardner, Minting Coins, Arthur Yaku, Nick Mangialavori, and Anthony Charles. Thank you all an immense amount for your generosity. I am digitally hugging every single one of you. I'm actually extending my arms. You can't see me though. Anyway, thank you all once again, and I'll talk to you all soon. See you.